Welcome. We've seen GDP out here in the UK. I thought I'd take a moment just to step back and take a look at how sterling is trading. But first of all, to the figures themselves. UK gross domestic product was estimated to have increased by 0.3% in the first quarter this year. That's the slowest rate of growth since quarter 1 2016. Analysts have been looking for a 0.4% print. Now, this drop from the expectation is mainly due to services, which grew by 0.3% compared with growth of 0.8% in the fourth quarter of 2016. There were declines in several important consumer-focused industries such as retail sales and also accommodation, due in part to prices increasing more than spending. Let's take a look at how this is working itself out on the foreign exchange markets for sterling against the US dollar, bearing in mind that at 1:30 today, in 3 or 4, 5 hours time, we get the US GDP reading. This is ahead of that. We've got sterling on this weekly chart here this week appearing above the simple moving average, the 50-period simple moving average. This is a fairly strong period for sterling, away from the lows at 118. We've currently got a print of 129.51, so very strong. Before we take a look at the daily, I want to look at the hourly chart. You can see quite clearly what's been happening here. You can see the hesitation that we've seen in the last hour around the release of the numbers, but since then, look at the way this next hour has opened very strongly for sterling, and this gives me an indication that we've got a lot of money going in, and really the bears have been beaten out of the circle completely, and that's likely to continue. Why is it likely to continue? Well, let's take a look at this. This is a daily chart for sterling. You can see that the bounce that we had when Theresa May announced that she wanted to go for that June 8th election from 125.60, that was a really large bounce up. Now, we've got this high point here of 129.14 today, now being overcome by this most recent candle, 129.50, where we're standing at the moment. If you draw a box around this area here and you look at that in particular, what you've got here is you've got a flag pole and a flag that's developed. Now we're breaking out of that flag, and that's significant, and I explain why that's significant now. We've covered this before, but I think it's worth mentioning again what's been happening. There is the flagpole that takes us up to the bottom of this period here, the bottom of that period there, and you take that flagpole and you copy that and you take that above there, the breakout, and that takes you all the way up to 131.26, which for me, 131.50, probably the sort of level you'll be looking at when this current pattern is completed. So this is a very bullish period for sterling, and sterling is expected to continue to rise. Now, where do you put your stops? If you're going to have a stop of a long trade on this, you want to put the stop here at around about the 127.70 level, which is the bottom of the flag pattern. That will give you safety just in case there is a reversal. That is if you're going long on this. But do remember those stops. Those stops are important because it gives you an insurance should there be a turnaround in sentiment. We're watching 1:30 today for the US GDP. Could that turn things around?